Welcome, friends. My name is Avinash Gorrakshakar, and I welcome you all to our program Konexio HighFlyers. Today, friends, we are going to talk about a very interesting cement company, and which is known as Shri Keshav Cement and Infra Limited. The unique part about this company is that apart from cement, it's got a very sizable exposure in the solar, power business. And today, to discuss the company, to tell us something more about the company, we have the chairman, Mr. Venkatesh Katwa. Venkatesh ji, welcome to the show, and thank you very much for sharing your valuable time with us today. So Venkatesh ji, before we start, I would like that any kind of doubts if you have on the show or any question you want to avoid, you can tell us. But we would definitely like to showcase your company and tell all the investing media, the mass public, that what are the positives about your company and what is the future for your company. So having said this, we can start.
Yeah, Hare Krishna, and thanks a lot, Avinash ji, for calling us on this meet. It would be a great pleasure for me to speak out my heart to my investors and the prospective investors, which I feel our company can provide a lot of value. And I'm ready for your questions and answer session.
Yeah. So, Venkatesh ji, first question is, we would like to understand that, from when did you start this company? When did you get into the cement business? Tell us something about your solar business. And basically, is this your only company in the group, or do you have any other companies in the group? So, if you can, put some color on this and please describe and give us the answer to this question.
Sure, Avinash ji. In 1993, cement plant was my father ventured into the cement area by purchasing a sick unit of 20 tons per day capacity from Karnataka State Financial Corporation. And then in 1995, we went public to expand this cement plant from 20 to 100 tons per day. All the way till 2007, we expanded that plant from 150 tons per day or 100 tons per day to 150 tons per day. In 2007, the management acquired another sick unit in the public auction from Debt Regulatory Tribunal for about 12 crore rupees. So that plant is of rotary kiln technology, which was expanded to 1100 tons per day from what we had purchased at 200 tons per day by by making a capex investment of around 65 crores in 2018.
Okay.
Apart from cement, as we have shown another vertical, our management has ventured into is solar power generation. Power is one of the high cost consuming uh, cost for our cement production. Because of which we set up a 22 megawatt power plant, which we expanded to 25 megawatt, and latest in December 2021, we added another 12 megawatt, making a total capacity of 37 megawatt, with the approximate cumulative investment of about 200 crores. It's about 190 to 195 crores.
Okay.
Apart from that, our other group companies are Katwa Infotech Limited. We have an office in Atlanta, United States. We provide revenue cycle management and medical transcription. In 2007 to 2012, we received the Best Company Award from the state government by the Chief Minister of Karnataka. Apart from Katwa Infotech Limited, we also own Katwa Construction Company. We build complexes and apartments in Goa. So right now we are focusing on cement and solar.
Okay. Fine. Mr. Venkatesh, if you could tell us what is the current total installed capacity for cement at both the plants, if you can give us a specific number, and what is the kind of broad capacity utilization you have been seeing, for the last, 12 to 15 months, because cement as a sector has taken off. I think it is a very important, input for infrastructure development. So, can you share with us your installed capacity and broad capacity utilization levels?
Sure. So as of March 2022, my cement uh, plant capacity is 1100 tons per day, which is roughly about 0.35 million tons. And
Okay.
solar capacity is about 37 megawatt of capacity, which produces roughly around 6 crore units per year, 5.5 to 6 crores units per year.
Okay. And as far as the cement, business is concerned, if you can share with us what are the main geographical markets which the company caters to, and typically, and now for the solar business, do you sell a major part of the solar power, or some part of the solar power is basically used for your power consumption also? So if you can give us inputs for these two questions also.
Absolutely. Cement is sold typically in North Karnataka, South Maharashtra, Goa, and little bit in coastal Karnataka. Cement as a product is very bulky, which means that logistics costs are always going to weigh down on the product because of the low value to weight ratio of cement, particularly. So our market has been very restricted to North Karnataka and South Maharashtra and Goa. Regarding solar power, we initially thought that the entire power will be utilized captively, but due to modernization of our cement plant, we started using less power. The excess power we started selling in open market. Uh, Due to incentives provided by the state government without any banking or transmission losses exemptions, we are seeing a very high level of realization in power sector. So typically about 40 to 45% of the power generation of today's installed capacity we are using captively, and the
Okay.
rest we are selling it outside.
Okay. Now coming to the cement market, Venkatesh ji, post COVID, if you can tell us what is the scenario on ground? Like, do you see cement consumption, picking up? Because now, this year also country is expecting a GDP growth of almost 8 to 9%. Infrastructure has been given a big push in this year's budget also. So, what are your thoughts on the current demand supply scenario for cement, and especially for your markets? What is your kind of thinking? Like, will demand take a nice shift into higher teens, and obviously should benefit a player like you? If you can put some color on that.
Absolutely. So with so many projects coming from the government of India, like PM Awas Yojana, which is homes for the poor, Gati Shakti, which is interconnecting the entire country with goods transport, and then what we see is smart city development. 4 to 5 smart cities come in our area. We are seeing a huge demand for the cement, and we have seen that last year too. It is going to keep going up. India's per capita consumption is around 200 kgs per capita, whereas world's per capita consumption hovers around 600. So I feel we have a long way to go. We are still under capacity utilized. As per the Indian cement industry standards, average utilization of cement plants all over India is about 65%, and that is because a lot of new capacities are being added, and that due to COVID there was a little dip, but it has already caught up, and we're already moving on the upward direction. And I see cement being very bullish going forward.
Okay. And another thing which I want to understand is now, everybody is looking at inflation very closely. I think most of the companies, most of the corporates are now worried that interest rates have started going up. So, Venkatesh ji, I want to understand from you that will inflation have some sort of any kind of negative impact on demand for cement? And in which way, is your company geared up to face this inflationary kind of trend in the market? Because we have seen not only the manufacturing inflation, the food inflation has also gone up. So overall, how do you assess this factor playing out on the cement sector?
Interest rates going up does generally affect all the industries, which means that when the EMI goes up, your disposable income goes down. So there is always going to be a pressure. But housing is one sector which is more like a requirement than something what people want to keep it aside for future. So cement, as it is, the way we are looking at it, apart from housing, the major demand is coming from infrastructure and government related projects. So frankly, I am very bullish on cement. I don't see any dip happening because of changing interest rates, not at the levels what we are seeing right now.
Okay. I think well answered. I think Venkatesh ji, another question which is related to inflation is that we have seen coal prices going up, pet coke prices going up, which are very crucial raw materials for the cement sector. Now, in that perspective, what is the scenario, as far as our company is concerned? Do you feel that, this pressure is now slowly easing out, or maybe at least for the next 1 or 2 quarters, these kind of, raw material price increases which we have seen are likely to continue? And, broadly, what could be the impact of all this on our company like?
A increase in the petcoke and coal is obviously a matter of concern. Definitely, we are much higher compared to about 1 quarter or 2 quarters in the past. But as I see right now, we have already crossed the peak, and the prices are already easing down now.
Okay.
The imports are improving, this coal production is improving, and in general, because of monsoon, thermal, basically coal is used mostly for thermal plants and even the cement plants. I see there's a lot of price easing as we go right now.
Okay. Okay. Venkatesh, one more question which I want to ask is that what is the plan for increase in your cement capacity? Like, you all have increased your solar power capacity recently, but as far as cement is concerned, can you share some plans which are, which you have in mind and which company plans to implement in the very near term?
Absolutely. So management is looking at a certain capex investment to increase the capacity by more than 2 times. One wonderful thing about this project is typically in a cement industry, a capex cost is around 8,000 to 9,000 per metric ton per annum. But we are doing it in less than 2,000 rupees, which is going to add a significant capacity at a very less cost. Uh, I don't know much about the cost, but we are talking about between 50 to 80 crores with the capacity expansion of nearly 500,000 ton added to the capacity.
Okay. And this will be, Venkatesh, will be done directly by adding cement capacity, or you will be putting up some grinding capacities, which will eventually lead to more cement, output from your side. If you can clarify that also, please.
Yes. So what we are doing is we are not increasing the clinker capacity. To increase the clinker capacity, a huge investment is required. What we are doing is we are installing a very high-end grinding system, wherein which will be mixed with the clinker directly to produce a high quality cement with this new technology.
Okay.
This will not only increase the capacity, this will also reduce the power consumption and increase the contribution margin of the product.
Okay. So hopefully, Venkatesh, we should see the implementation of this grinding capacities at least in the very near term. I mean, if not this financial year, at least by next year, we should see this grinding capacity. Am I right to assume this? I mean, if I were to ask you.
Absolutely. Most likely in next maybe in a quarter or two, we should have finalized everything and we would come up with what we would be doing with the capex figures to the board.
Okay, fine. Venkatesh, now coming to your solar business, now this is very interesting. You all have created a very large, install capacity of 35 megawatt. Now tell me, this capital expansion which has just happened at the end of the financial year, that is March. Now, what is the impact of that going to be, broadly on your revenue, even without sharing a number? If you could just tell us that what kind of capacity utilization you expect in the next 12 months from this increased capacity, and in what sense, it will add to your operating EBITDA, because I saw that in your operating EBITDA, solar business EBITDA is pretty attractive. So if you can give us some idea as to how this, unit will actually contribute in a healthy way to the overall profitability of the company going ahead.
Absolutely. This is a very interesting question because the first project when we had set up, which is 25 megawatt, we had utilized about 70% of the power for self-consumption and only 30% of the power, or maybe 20% of the power was being sold. But the next project what we completed, which is 12 megawatt, now the capacity is about 37 megawatt. The entire power from that will be sold out. I
Okay.
mean, basically, the arrangement is such that the new power plant, we will be consuming the power, and the first power plant, which has got a host of incentives from the government, the power from that plant will be sold out. So this
Okay.
year, we should look at, as you rightly said, solar business has got a very high level of EBITDA, very unseen in regular industries. Almost 95 to 96% of the revenues reflect as EBITDA. So the new plant will basically give us revenues. It is not the excess generation what we are going to show from this point onwards will convert directly into revenues and EBITDA.
Okay. Venkatesh ji, now I would like to understand, what is the working capital cycle for the cement business and the solar business? Is it similar or is it, different for each of these businesses? If you can please tell us.
They are completely different. Cement comes with almost a 150 to 160 days working capital cycle. That is because of the very high level of inventory we have to keep. Like our limestone inventories goes up to nearly 4 months, and similar with coal and other products. But our debtor cycle and creditor cycle is very very low. We are able to efficiently manage our working capital cycle with such a low debtors and creditors. However, for solar, the working capital cycle is very very less, because typically because of the huge demand and RPO obligations required by the industries, the payment comes in pretty fast and it is much more efficient.
Okay. Venkatesh ji, now I wanted to understand on the capital structure, what is the total debt the company carries, both long term, short term? What could be the total borrowings of the company as on, let's say, the current financial year, that is March 22, if you can share with us?
Sure. Basically, if we can exclude the promoter's contribution, which is a subordinate debt to the term loan, which is
Yeah.
entirely promoters' funds which has been infused, and promoters we will be keeping it as per the requirement. About 170 crores is an outside liability, which is a long-term debt, and about 4 crores is the short-term debt.
Okay. And in the coming financial year, Mr. Venkatesh, can you tell us that, do you expect this debt to be more or less stabilized at the current level, or some fresh additions could happen? Because, apart from the capital expenditure which you are planning, for the existing business, I believe you will not require any further debt. So if you can please clarify on this part, please.
Absolutely. See, company has a history since decades since we started a business of repaying the term loans to the bank on time, every time. We have never defaulted or delayed in our repayment. So what has happened last year is the downward trajectory would have continued had we not set up the 12 megawatt new solar plant. So whatever the new debt or incremental debt that you see on the books compared to last year is because of the new investment. So the
Exactly.
current financial year, if the new CapEx materializes, of course, a new debt will show up and the new EBITDA will also add up. But as of
Okay.
now, based on the facts, on the existing assets, there is no plan to acquire any new debts. We will continue to repay them and reduce them as we move forward.
Okay. Venkatesh ji, now a very broad related question, like, you have been in the cement sector, solar power for a very long time. Now, talking about your cement business, now what exactly would you say are the competitive, kind of strengths or business modes which, our company enjoys? Because obviously you all have put a lot of time, energy, and ground level experience to all this business. So in what way, is now you're trying to encourage, branding of your product, better marketing, better visibility? So on this, if you can share your thoughts, if you can tell us, please.
Sure. So, in the last 1 year, there has been an extreme strong focus on the marketing of our product, which was not basically not being very focused in the previous years. That is because of the increased capacity, we wanted to go for an increased utilization. So, some of the strengths, what I would say, the management has a very huge cumulative expense of our experience of over 100 years all put together, with each director knowing the nuts and bolts of the industry. Secondly, we have a very good location advantage. There are, other than a couple of plants, there are no major plants located around us, which means that we will be able to service our local market very efficiently. So the market, for example, a particular market, uh, let's say Belgaum. We live in Belgaum, and that market is about 100 kilometers from for me. But for the major plant, it is about 350 kilometers or so. So, and like I said in the beginning, logistics does play an important role in the cement pricing. So,
Yeah.
location advantage is always going to be there. And
Okay.
thirdly and lastly, we so much focus on the marketing. Now we have got uh, approvals from various government departments, infrastructure, the irrigation projects and dams, and we are already beginning to supply to all these project work.
So anyway, I think very nicely articulated, Mr. Venkatesh. Now, Venkatesh ji, tell me one thing. As a concluding question, that what is your message to all the shareholders? Like, a lot of shareholders have remained with the company for a long time, and they have certain amount of expectations from you. So, as far as the dividend policy is concerned, as far as rewarding these shareholders, what could be your message to the shareholders? Like, at least for the next say 2 to 3 years, what is the kind of outlook you would like to share with them? And communicate with them as to, so that their capital also multiplies along with the company's growth also happens. So what could be your message to them, if you could please share some few words?
Yes. First, I would like to thank all my shareholders who have put a faith in the company. We assure you that your company is in a very strong hands with an experienced team and a young team who wants to grow and develop new capacities and increase the market bandwidth going forward. As you have seen in the last 5 years, there is a significant change in the financials, and it will continue to grow on a higher level going forward. That is how we are looking at it. As far as dividends and payouts are concerned, a company was very strong on paying dividends in the past. It has not left our mind. We still consider that the best way to reward shareholders is by dividends and giving them a proper growth for what they have invested in. So we thank you, and you can expect your company to grow going forward.
So anyway, I think Venkatesh ji, thank you very much for your time. I think friends, we had a very fruitful discussion, Mr. Venkatesh, and I think we got a lot of valuable information in today's interview. So thank you very much, Venkatesh ji, once again, and all the best for you and your company in future. Thank you.
Thank you, Avinash.